Okay, let's talk about shovels and gold. And, well, a $4 trillion question.
All right, picture this. You've got a field, and it's just full of monkeys. Then, all of a sudden, someone shouts, "Bananas! Buried treasure! A banana rush is on!"
So naturally, all the monkeys want those bananas, right? They start digging like crazy. But to dig, you need shovels. Lots and lots of shovels.
So, here's the thing. Who actually got rich in all of this? Was it the monkeys who were digging for the bananas?
Nope, not a chance. It wasn't the diggers. It was the one, really smart monkey who was selling all the shovels. He got very, very rich. Now, this isn't just some silly story, I promise. This is basically happening right now, today. But the gold, well, the gold is a little different. And so are the shovels. I mean, look at this. The parallels are just uncanny. The prospectors, the people digging, that's today's big tech companies. The gold they're after, that's artificial intelligence. And the shovels, well, those are these incredibly advanced computer chips sold by pretty much one company, Nvidia.
And just like our clever monkey in that banana rush, the company selling all the shovels is making an absolute killing.
And when I say a killing, I mean Nvidia's value has just exploded to over $4 trillion. To put that in perspective, that is more than the entire economies of most countries on this planet. It's a staggering number. And you can see exactly why. Tech companies are pouring unbelievable amounts of money into these chips. We're talking hundreds of billions of dollars every single year. And look, that spending is projected to just keep going up and up. They're buying shovels like there's no tomorrow. Okay, so this brings us to the most important question in this whole story. Are these tech companies, our modern-day prospectors, actually finding any gold? Are there any bananas in the ground?
Well, the early signs are, let's just say, they're not great. A huge study from MIT found that for 95% of companies, using AI had literally zero positive impact on their profits. On top of that, very few people are actually paying for AI services right now, and some are even saying the tech itself isn't improving as fast as it used to.
So what we have is this huge kind of scary gap. There is a mountain of money being spent on shovels, but only maybe a tiny little pile of gold being found, if any at all. So wait a minute, if there's no gold, how in the world can the diggers afford to keep buying more and more of these super expensive shovels? Where is all this cash coming from? The answer, it seems, is something called circular funding. And it's actually pretty simple. Imagine the shovel seller loans a monkey some money. But here's the catch. The monkey has to use that money to buy shovels. From him. See? It looks like there's huge demand, but really the money is just going in a big circle. And here's a perfect real-world example. Nvidia invests in a customer, in this case, OpenAI. Then OpenAI turns around and uses that exact same money to buy billions of dollars worth of chips from Nvidia. The money just takes a quick trip out the door and comes right back home. But now it gets booked as a sale. So, a huge technology boom. One company that completely dominates the shovel market. Some, let's call it creative financing. If this whole thing is starting to feel a little familiar, well, it should. We have definitely seen this movie before. Think back to the dot-com bubble. There was a company called Cisco. They sold the shovels for the internet, routers. Their stock went to the moon, and then it crashed. And get this, Michael Burry, the famous investor from The Big Short, the guy who predicted the 2008 housing crisis, he's now betting against Nvidia because he sees the exact same dangerous path. And Burry's argument is really simple and kind of brutal. He's saying the demand isn't real. It's just one giant circle of money, where the shovel seller is basically bankrolling its own customers. And this is where the story gets really, really dangerous. Because it's not just about one company anymore. It's about how tangled up the entire system has become. You see, Nvidia is part of this tiny club of tech giants they call the Magnificent Seven. Now together, these 7 companies, they make up more than a third of the value of the entire S&P 500 stock market. And they're all deeply interconnected, all buying and selling each other's shovels. So the takeaway here is pretty straightforward. The market is absolutely flooded with shovels, but nobody seems to be finding very much gold. We've got too many chips, not enough profit, too many monkeys, and not enough bananas. And that leaves us with one final and honestly kind of chilling question. If the one monkey who's selling all the shovels suddenly goes out of business, what happens to everybody else? What happens to the whole jungle when everyone finally realizes the Great Banana Rush was just a fantasy all along?